Welcome to the weekly pivot for September 21st, 2025. So this week, let's review last week. We'll see what we got right, what we got wrong. Let's talk about upcoming events. We'll talk about SPX seasonality, and we will review some SPX chart analysis on a couple different time frames. So last week we talked about a 25 basis point rate cut, and that is in fact what happened. We've been talking about this daily structure and how this daily trend continues to be very strong, so we should not fight it until we start to see some structural breaks, and that continues to be the case for our daily trend. I was expecting a near-term local top for some daily mean reversion around 66.50. We did get some daily mean reversion to the 13 EMA zone, but for what I'm looking for, that doesn't really count. So, I was expecting 66.50 to hold as some resistance short term to give us kind of a pullback, but the pullback that we got was kind of a pullback for ants. We've broken that 66.50 level and closed above it, and market continues to show strength. So we're just not going to fight that until we see some structural changes on it. This week we have a lot of Fed speakers all week long. So check your favorite economic calendar, investing.com, Market Watch, whatever you like. And we've got Fed Chair Powell on Tuesday. We've got core PCE prices of GDP on Thursday. And then we've got PCE in Michigan inflation data on Friday. Let's talk a little bit about our seasonality. This is a very interesting statistic that we've been tracking. 75% of the time that we've had a positive summer, we've ended up with a positive September. And so far, this September has not disappointed. Now, on average, over the last 20 years, we've also had positive Septembers more than negative Septembers. Still have a third of September to go, so anything is possible. But as it currently stands, it looks like this statistic should hold up. And it looks like this green summer has led us to another green September. So we'll continue to watch that. But for all intents and purposes, I think this is probably going to hold over the next third of the month of trading. All right, let's talk about the chart here. So I've got a daily chart on the left, weekly chart on the right. We've been talking about this daily trend, just beautiful daily trend that's been, every dip buy has been essentially bought. Even times when we've sort of gone below the mean, those dips have been bought, including the last few times. And last week was no different. We did find some initial resistance. It kind of looked like the target of having a 66.50 local top. Looked pretty good going into FOMC. We had some resistance up here around this 66.25, 66.30 pivot. And then, during Fed Chair Powell press conference, we did have a dip down to the daily ribbon, and it did look like we were starting to see some weakness before almost the entire move was retraced on the day of the press conference, and then we had continuation above this pivot to close above it and above our 66.50 resistance target. So, market continues to show incredible strength here. We got this mean reversion, and not the kind of mean reversion I was looking for. I would really, prefer to have something more substantial, but the market continues to be hot, and there's no reason to try to fight that until we start to see some structural change on it. At the end of the day, the chart's going to tell us what we're going to do, and we're going to go from there. So I have not positioned short for anything. As it currently stands, we've got this 66.25, 66.30 pivot. I think that's an important level to keep note of. We've got a bunch of support down at 65.50. And then we've got this quarterly 1 ATR. So this is the plus one quarterly ATR for this current quarter, up at around 67.70-ish. Just below 6,800. And it is possible that we get up there by the end of the quarter, if this trend continues, along this trajectory and we continue to get strength. And we're seeing a lot of names in the market with tons of strength. Apple, obviously, anybody who's been following me knows that's been one of my big trades recently. We've had Tesla, which we were in the last couple of weeks. We've had Google, which has been absolutely just ripping face since the Bard issue from a couple years ago that we talked about. And a lot of other names are starting to look interesting again. Obviously, we've got things like Meta and Microsoft. So market continues to be resilient, continues to be a lot of really good activity in names on the long side. And I think we'll just continue to ride this trend. It continues to be higher highs and higher lows. Let's zoom in a little bit. Now I've got the hourly chart on the left, and then I've got the daily chart on the right, just so you can kind of see where we're at. This hourly trend, I mean, look at this. If this was a daily chart, this would be a beautiful daily chart. The only thing that we saw here was some possible divergence on the hourly, and then we recovered almost immediately. And then we've continued higher. Pullbacks to the hourly continued to hold, and we're marching towards this 66.76 level. We've got the swing golden gate open, and then we do have +1 ATR for the month at 6,800. So that is something to think about. If this hourly trend continues to go, we've got plenty of time for this to actually head all the way up there. Now, if we start to see a breakdown of this hourly trend, then we can start to look for some levels south of this ribbon. But hourly trend is strong, daily trend is strong, not worth fighting until we start to see some break of that. I would continue to monitor the hourly trend. As long as that's showing extreme strength, there's absolutely no reason to try to fight that. And that's your weekly pivot for September 21st, 2025. I'll see you in the next one.